The Hedgeless Horseman here. It's August the 6th, at least in North America still. First of all, thanks to the sponsors. Today we had quite a good rebound in overall stocks. Crypto also rebounded higher. I think the Nikkei, the Japanese index, was up like 10% or something. And the funny thing is, I mean, imagine how quickly things can change. That you can have, an incredibly abnormal down day. It's like, some indices fall the most in a day or 2 days than they did since, I don't know, 50 years. It's like sheer panic in a sense. And the very next day, you see an up move, at least in Japan, that's like insanely abnormal as well. Up 10%. The entire, Nikkei index is up 10%. That's not a small thing. Gold actually held up quite well. I think it was green for a period of time, but then it turned into one of those days where everything risk on basically rebounded. Stocks, crypto, copper, oil, everything that's kind of, I don't know, pro-cyclical, let's say. And I actually did a video yesterday. I think it was yesterday. I haven't uploaded that. That was during the crash or after the crash day. I don't know if I'm gonna upload this one before that, but anyway, be on the lookout for that. But let's, have some perspective here. So yesterday there was a lot of doom and gloom. This is what happened. It's absolutely crazy. That's the funny thing when you think about that. As like I talked to some friends, you have a 2 day drop in the US stock market and world stock markets actually. The emotions run high because everybody has, think about how much money is tied to the stock market and, the banks and the brokers and everybody that has something invested in the general stock market, and obviously the better the stock market has done, the more retail people will be in it and all that. So like everybody's in this boat. And it's like as soon as there's some kind of hiccup, it's like panic scrambling. And you see tweets or news about, we need to see emergency rate cuts and stuff. I mean, imagine if we got that in the mining sector, which basically, and I covered this in the video that's not yet published perhaps, but the stock market has had one severe crash. Well, this was actually a severe crash. It was like one bear market that lasted more than a year since 2009. So you can imagine how people are spoiled. Everybody just assumes that stock market should all in all go just continue to go up, and long term that's 100% true, but that doesn't mean that, well, we don't have the Nikkei index here, but here you had kind of sideways action until 6 years of sideways action. This was relatively brief, but other than that, it's like yes, some flushes, but it's like marching higher, typically, and that's of course what you get used to. And the more people get used to it, the more people assume it, the more the world is obviously morphing around that narrative in a sense. More leverage and more what have you. It's the same with the housing market, obviously. I remember for a long time, this is years back, and the houses have gone up since then. It's like, people that didn't know much about housing market here in Sweden, Stockholm, they said, well, it's always a good bet because housing prices always go up. And, 8 years later, they've still gone up. Well, they actually have corrected a bit recently, but it's like not a major crash. So of course that's gonna, as always, get people to do more of what has already worked. And that's, I guess, why you have these, I was gonna say, how cyclicality works. It's like, I mean, after this run here, you can just imagine how high the sentiment was. A lot of weak hands they just bought, so they're very susceptible to any corrections. Basically, they'll sell out because they're only more and more momentum traders get in. More and more retail that has no idea what they're doing get in, and then it's ripe for, let's say, shorts or whatever, people to make some money on the downside, and they get flushed and they sell the bottom. Then it goes up again, and it's like this gets new people involved, and then it's ripe, there for the taking again, etc., etc. And yeah, I mean, we don't have that in the mining sector. The thing is obviously that if you constantly have the Fed put, as one says, I mean, or I should put it like this. COVID was obviously a black swan, but they made some huge reactions, like they gave out what $2-3 trillion to people or something like that. I mean, they get more and more inventive, let's say. Here they came up with zero rates and even negative rates later on, and then they did basically helicopter money. And all of those would be extreme. I mean, negative rates is not even in the economic textbooks that I remember. Helicopter money, I mean, that's not really something that jives with the US, right? Basically, real socialism, I was gonna say. But they've done so in response to stuff happening in the markets. So it just shows, it's like, I mean, the toolbox just morphs. That's why it's hard to have have linear thinking, but because they don't play with, there's no set rule book in a sense. I've heard that some of what the Fed has been doing over the last several years is actually illegal technically for them to do, but still they're doing it. So I mean, if, let's put it like this, the many doomsayers, and it's like, I would expect the can not to be kicked this long. But if we had a regular rule book, let's say, if we couldn't have negative rates, if we couldn't do helicopter money, or if the US could, things would probably be very much different. But it's like the rule book goes out to the window. That's why it's in a sense rigged in the favor, obviously, of risk takers, where especially where everybody's piled in. It's like in Sweden with the housing market. I mean, everything is kind of done. Well, most of the time, stuff is done for the housing market to keep going up. Why? Because obviously, all the politicians have fancy houses, all the donors have fancy houses, all the rich and important people have fancy houses. Everyone in Stockholm that owns an apartment or a house has a lot of of their assets tied up in real estate. So everybody's sitting in the same boat, especially the ones that are rich and powerful, etc. So obviously they're gonna basically prioritize themselves first, not the poor student that can't buy an apartment even. But that's just how humans work. I mean, that's probably how civilization has always worked. And of course, as gold bugs, etc., we're kind of betting against the status quo. So everything is kind of going to be rigged against us in a sense, until some people believe that the US could fix the debt problem very quickly, just revalue gold to whatever, and then they have all the money they need. Maybe that will happen one day. Maybe not. Maybe it's going to be the market that forces gold to revalue against the will of the powers that be. But that's the thing. So it's like we're playing on hard mode. I think the gold sector has always played on hard mode in a sense. There's no, what's it called? Plunge protection team for the gold sector or the gold miners or anything like that. I mean, this is chump change for us. 2008, I mean, we've had like 5 2008 since 2008 in the mining sector. But there is no plunge protection team. The only thing that saves it is basically the law of demand and supply. Because the stock market still needs all those commodities. So if they pump up the stock market and pump up the corporations, well, they need commodities, so you can't shut off all the mines. So if prices go low enough and they shut off some mines, the prices of the commodities skyrockets, and then we're back into a bull market again. I mean, that's the thing. That's at the end of the day, there is no Dove 30 or Nikkei or whatever without the mining sector. So that's the mining sector is more important than S&P 500 because it's lower in the totem pole, meaning that all of the value and all of the business that is in the S&P 500 has its basis in the mining sector. Without the mining sector, you can, and the oil sector, whatever, so like and agriculture, of course. So that's the basis for civilization. Everything is just value add, basically. So obviously mining and food is the last things to go. But yeah, I mean, I guess it's obviously taken for granted. That's why you see these timelines for mining, mines, etc. It's just getting longer and longer and longer, which is interesting. It's almost like they believe that the stuff that Apple and whatever makes, that it just springs out of the ground like wealth from the state. But we know that's not true. Still, I mean, that's something to, and I think one should be proud of that. I mean, we don't have a plunge protection team. We don't have any guardrails. It's we're the most probably worked against sector there is. Because like I said in that video I haven't yet published yet, and will probably publish after this actually. You have these, people brag about having experience and actually being able to average down during 2008. So it's like that is the biggest test to the generalist investors, really. Well, except for a 2-month period here in 2020, and here I guess. But this is the only real test in the especially the junior sector, in the mining sector. We have tests like this every 2 years, basically. And that's why you can make a lot more money in the mining sector. But if you can't buy low, buy cheap, you're gonna get killed much quicker than in the broader stock market. That's just how it is. So it's like if you are able to control your emotions and stick to, in my opinion, value investing, you can make more money in the mining sector than you can in the general stock market, typically. Of course, there's going to be some companies, and even Nvidia, a very large company, became a multi-bagger. But when you think about it, it's true. Anyway, I like this quote from Rick Rule. I saved that. Days don't matter, stock selection years matter. That's what we tend to forget, and I am honestly a bit disappointed with myself. I think I look too much I spend too much time on Twitter. I spend too much time in the forum. I spend too much time actually, at least some days. I mean, some days I don't look at a portfolio at all, basically. Some days I do more of it. And typically the more concentrated I will be, the more I will watch a position and stuff. I mean, it's kind of natural. But as he points out, I mean, days don't matter. A stock that's up 10% and we're cheering, it might be down 10% the next day. Stock that's down 10% and we're depressed might be up 20% the next day, so forth and so on. And it's an absurd compounding pace. I mean, if when something goes up 10%, in itself, it's an absurd compounding pace. If it would keep going up 10% per day, we would be richer than Warren Buffett before the end of the year. But this is, again, and you can take it from this guy. This is how he has made money. And I remember when he pounded the table on Ivanhoe, for example. I think it traded around cash levels or something. But it didn't go anywhere. It just traded, if I remember, this was maybe 2016, 17, traded in a sideways basically, and I was looking at, it's like, 500 million. It's like, this was before I really got into, understood more about mining and, the opportunity cost and what is a good case and all that. But I remember he kept pounding the table on Ivanhoe because it was trading in cash. So at face value, there's like no risk really. And that later, I don't remember what it traded at. I guess it traded at around 50 cents, if I remember correctly. So 1-2 years passed. I didn't remember seeing much action, but recently it's up to, I think it touched $13. Maybe it's actually higher than that now. Um, let's see. Yeah, $15. Let's see, when could it have been? Yeah, around this period, I guess. Oh, was it already at $4? Maybe actually. Still, it beat the shit out of the mining indices. Still, and before that, I mean, so it's obviously done well. It's close to an all-time high. But I remember he just kept saying, it's like, Ivanhoe, high conviction. Nothing really happens. More red than anything else. So traded sideways to down, flash crash. Then boom, it started to go up and revalue. And obviously things happened also with the company. It's like they progressed, they de-risked, they put it into production. So eventually he made a lot of money on this. Same with what he did with uranium. He bet when it was really really cheap, when he thought uranium prices could only go higher. Maybe it took 2 years. Eventually made a lot of money. That's one thing. I mean, I tweeted this today. It's like I think I'm more patient than most, because you see people in the forum channels. They're and I mean I sometimes comment on the price action of a stock on a given day. I that happens. So I'm not going to be a total hypocrite about that. But still, I mean, you see a lot of people commenting on in some stocks, like every single day, commenting on the where the price is going that very day, and that's obviously not too healthy. I also think it means you have a very very large position, maybe too large actually. But if you have a very high conviction and you only have a few stocks, it's obviously hard not to think and look at it. But yeah, so this is the main thing. Days don't matter. If your stocks go down today, it doesn't matter. If they go up today, it doesn't matter. Come back in 1, 2, 3, 4, 5 years. If you're up 200% in 5 years from today, that's a good return. If you can average that over the long term, that's a really good return. And given where the levels are in the junior sector right now, I think if we are good at, again, stock selection, I think we're gonna way outperform 200% over the next 5 years. So in a sense, if somebody asks me, it's like, what's my portfolio gonna do tomorrow, next week? I have no idea. Might as well be down. 6 months, probably up, especially from these levels. I would think to research the upside. 1 year, more probable that I'm gonna be up. 2 years, much more probable. 3 years, increasingly more probable. 5 years, no brainer. And those are those are also the best cases, I would say. Where it's like, because think about this, when you think about a case, draw out the timeline. The harder it is to see the future, it means it's more speculative. Because especially if you're an early stage explorer, it's like it's impossible to say what it's going to look like in 1, 2, 3, 4, 5 years. The range of possibilities are like endless. No discovery, a small discovery, a big discovery, an even bigger discovery, and everything that can happen in between. Geopolitical risk, the metals doing whatever. But if you can kind of see what you think is like, okay, this is my base case. If they did this and that, if that happens and that happens and that happens, and maybe you put that as a 60% probability or something. Hey, then it's probably going to be a 5-bagger over the next 3 years. That's a great case, where you can envision, you can see the future early, and you look what you pay for that future now. Obviously, you don't want to pay full price for an uncertain future, but if your base case is multiples higher than the current market cap, and you think there's over 50% chance it's going to happen, If you have several stories like that, I don't think there's any way you're gonna really lose money over the next 3 years, for example. Uh, let's check out some slides I saw today. Hedge funds turn bearish on commodities. Investors flip their position for the first time since 2016. So it's negative for the first time since early 2016. Do you know what happened in? Let's see here. Let's do SILJ. Okay. So hedge funds are most bearish commodities since beginning of 2016. Any day now. Okay, what happened when they were as bearish as they were now? Beginning of, oh, lo and behold, beginning of 2016. Well, it's just too perfect. It's just too perfect. I mean, if you need, I was gonna say more evidence, was like most hedge funds suck. Well, statistically speaking, they do suck. What 1 in 10 active funds actually outperform an index? So yeah, statistically speaking, they do suck. And of course, I mean, in this case, I mean, yes, sure, metals are not as low in absolute terms as they were back here. Silver is not at $11. Silver is at what, $27, something like that. But look at the mining sector back here. And it's like, yeah, given where silver and gold is right now, it's not that high. Because here nobody was making money. Here actually some people are making money. But imagine if you're the collective of hedge funds and your max bearish commodities. And of course this is SILJ, but just note again, last time hedge funds were this bearish commodities, within 8 months SILJ index went up 383% in 8 friggin' months. Almost a non-stop bull leg for 8 months. It was the most surreal thing ever. It's like, I remember Great Panther. I think they nowadays they're bankrupt, but I remember I bought them down near the lows here, and it just kept going up and that's the only stock I actually was able to sell, get out of my position basically at the top. I think I remember the 3 last trading days at the top, and then I was already in the green by a pretty big margin. But I remember the 3rd last trading day, I think it went up 10%. The next day it went up 8%. And already then I'm like, Jesus, now I know what typically happens when, no news. It's back then it was probably not that cheap anymore even, so it's like has no business really to go higher, but it just kept going. And the 3rd and last day it went up 10%. So 10% followed by 8% followed by 10%. I mean, from the lows here, I wonder how much I added in the return just on the last 3 days. Just incredible numbers that I actually sold, because I was like, I actually had a spreadsheet of valuations, like, okay, this is getting kind of expensive now. But don't forget that I also sold the First Majestic round here, because I thought that was already expensive relative to the other silver producers. First Majestic did something like this, but it was wildly overvalued at the top, of course. But yeah, that's the stuff that can happen. So we've looked at that. Hedge funds negative, betting against commodities. Closest was 2019. What would this be, like September 2019? Would it be September? Yeah, maybe around here actually, or maybe, yeah, 2019, not July, but it's like around this level. That also proved to be a good run, but the only time, first time since 2016 that they're actually a negative bet. But let's look at commodities. Let's look at, I think copper. No, I think zinc did a major low in 2016. I think copper. Yeah, I mean, you can't argue. It's like this was the bottom. This was the cheapest point since, except for this flash crash. Even copper, if the last time hedge funds were actually net short, copper went up 159% over the next, what, 6 years. I'm actually gonna look at zinc. I think that was even more pronounced. So we have no idea what this means, first of all. Okay, early 2016. 146. But it did it in like, what, 2 years instead of 6 years. But it actually went up in full. Okay, 2007. And no, when would that be? Maybe. Okay, so the other time they were kind of net or very bearish, but not short, would be around this time here. That was a sell-off before, but then it ripped higher. So what this suggests, at least, that's like, I think we can safely say that most people that would have sold commodities have sold commodities. So there's fewer and fewer people who are actually interested in selling because everybody agrees that commodities are going to go down. So you can imagine there could be some kind of shock happening. Maybe inflation kicks up, something along those lines. That would jive with that would certainly jive with such an extreme positioning. You have something happen, and all of a sudden it's like, oh, they're totally wrong again, almost like it's kind of scripted in a sense. Anyway, this is also one interesting one. We are seeing the worst second move in our cyclicals versus defensive X commodities pair ever recorded. I guess that's a spelling mistake, but that's probably, yeah. So I think this is legit. The worst second move. Daily 2-day. Okay, 2-day move. Okay, gotcha. Basically, sheer panic. 2-day panic. It's actually surpassing the COVID crash. But this probably, as people who said, say on Twitter, it's like tied to the carry trade and all that, so it's exacerbated, and a big unwind. Everybody sees what the result of that unwind is, meaning a lot of crap goes down, and that makes everyone panic. Still, okay, this was a buy, obviously. 2016, okay, middle of 2016. But it's like we didn't see this kind of 2-day panic even during 2008, 2009, apparently. But this also, I guess, in a sense at least, suggests that maybe it was a bit of an overdone fall. But hey, at the same time, yesterday it felt like the world was gonna end. So can forgive them, and that just goes to show why it's like, I know I make mistakes when I try to guess macro, because as a gold bug, anytime we see stuff in the market, it feels like it's the end of the world, because that's like what your brain is programmed to look for, because that's our confirmation bias. So it's like confirmation bias, not always bad or good, in my opinion. But it's like in this sense, we have a huge bias towards the end of the world, even though we can look at the stock markets and see how much Dow has gone up, even though people have been calling for a crash, and we've been expecting a crash and the end of days for years, decades. This is interesting as well. S&P forward total return following CNBC markets in turmoil specials. I think you know what I mean. They have this segment when there's a rocky down day in the markets, then they have a title that says market in turmoil since 2010. Okay, I mean, it's somewhat of a selection bias because it doesn't factor in 2008-9, but it's like since 2010. That's 14 years. 1 year forward return. This is 100% hit rate. The S&P 500 traded higher with a good amount. I mean, a 1 year return, so like 49, 50, 32. I mean, that just shows buying the dip. Why buying dips is the only real way, I was going to say, the easiest way to actually make a lot of money in any sector. Because it's not like the S&P 500 average, 50% returns over yada yada yada. I mean, these days are kind of close by, so I guess this is kind of the same period. So it's a bit of a, there are clusters. Let's put it like that. Still, it just goes to show when you buy dips and the world doesn't end, the future returns go way up. Maybe before the dip, the 1 year forward return actually was 15% or 10%, but at the dip, 69, for example, 58%. That's when you should be buying, because obviously, especially in, for example, junior miners that are much more volatile, you can still only lose 100%. But the upside is kind of theoretically infinite in a sense. And if you buy dips, I mean, if you buy let's say, a tier 1 project gets sold for 2 billion. You buy a junior at 500 million. That's 300% theoretical upside. You buy one at 50 million. You get my point. It's like when you have some sort of cap, sure, but it's like there's obviously more room to run if you buy cheap. And this is just one I saw. Average lead time almost 18 years from mine started. So yeah, I mean, that's kind of crazy. And of course, that's why I was listening to Cisco Mining, the CEO. He's talking about how much harder it's becoming for the miners. And this is not news to most people, of course, but like, as he basically says, it's kind of a ticking time bomb. We don't know when this is going to hit. Because people have been saying this for a long time, right? Oh, it takes so long time. It takes such a long time to bring anything online, so we can't. We can't respond to demand in time. But still, it's like, okay, we're not seeing the big bull. We're not seeing the supply crunch. We're not seeing demand overwhelm supply and all of that. So people, contrary to the housing bubble or market where everybody expects it to go up, here it's like, everybody expects this to not matter, kind of, because we haven't seen that much evidence yet. But who knows? Maybe it's like all of a sudden, within 5 years, it's like you have some mines just come, mines that have been running for 40 years or something. They just, okay, one depletes, then a second one, but it's like for, let's say, 28 years, they, side by side produced a lot of copper or whatever, but it's like, yep, all of a sudden they reach the end of their mine life, for example. And all of a sudden everything starts mattering. And all of a sudden then it's like, oh, how are we going to respond? It takes such a long time. So it's like, that's probably what could happen. It's like it won't really matter until it really matters. And then it's kind of too late. I think that's one reason why... well, not the only reason, but it's like, what are the major miners doing? They're buying up other major miners that have operating mines. Why? Because, I mean, that's obviously something one would do if one expects a supply crunch coming up and you want to monetize that. You necessarily don't, as a miner, you necessarily don't want the supply crunch to happen in 5 years. You buy a bunch of copper mines and they're going to be up and producing in 20 years. I mean, then you missed maybe 15 good years where there was no mines out there really to pick up the slack. So if you front run that and buy the cash flowing operation, when the supply crunch happens and you have operating mines with 10, 15, 20 year mine life left, you might get really, really rewarded. I mean, the ideal time would obviously be that you buy an operating mine that's pricing in the current, let's say, relatively low price of copper, for example, and it's like the day after you buy it at a fair price at today's copper price, the day after the supply crunch starts to materialize and copper prices go up. It's like when you paid fair price, copper price starts to go up, your profits start to go up, maybe you make more in the next 3 years than you did in the last 8 years or whatever. And that holds for quite some time because, again, there's such a long lead time. Yeah, I mean that's obviously if you thought it was imminent, you would obviously bet on the most advanced ones, and that would be actually the cash flowing operations that are permitted and already in production. Anyway, let's look at some news. As always, I'm taking so much time. Goliath drilling confirms 100% of the first 8 holes of 2024 hit significant mineralization. 75% of the holes contain abundant visible gold up to 1.3 millimeter in size. Shorebet discovery Golden Triangle BC. And as always, incredibly meaty news release. A lot of descriptions, VG and visuals like mineralization, how the core looks. Hole 242, color from Golden Gate pad intersect the multiple intervals of mineralization consisting of quartz sulfide veining and stockwork, cumulatively adding up to 90 meters, within which 4 occurrences of visible gold were identified and remain open. We don't necessarily know how wide the occurrences were, and sulfide veining and stockwork cumulatively adding up to. That doesn't mean that's going to be a 90 meter that has economic grades. It's just that there's mineralization and not necessarily economic. Obviously, the probabilities of intervals being economic or maybe very economic goes up with visible gold, because then you actually see the metal, and typically that signals there's going to be a high grades. Can't take that to the bank, but obviously most juniors would kill to have any drill hole with 4 occurrences of visible gold. It is important to note that the gold zones start at the top of the mountain, where there is an extremely large outcrop with 700 meters of vertical relief. It goes down to 1 kilometer on the south slope, and yada yada yada. The gold zones could be easily accessed. I mean, this is basically showing the scale of the system. We know it kind of outcrops up to and over the ridge and down again, the shorebed system. Drilling is barely started to scratch the surface, with excellent potential for additional discovery. I mean, that's basically what they've shown over the last 1-2 seasons. I mean, the more they drill, the more zones they find. And the zones they've found, they haven't found the ends of. The expanded 2024 drill plan will focus on building continuity on the 10 known mineralized veins, including Shorebet, Bonanza, Eldorado, and Golden Gate, as well expanding them all in all directions, which will allow the company to better understand the size of grade distribution of the system that remains open. So, I mean, to sum up, as per also the previous news release, well, the second last news release, the previous one was that they got 1.8 million of warrant money, which allows them to drill more before they need to raise. Obviously, we should be expecting some good assay results to come out of this year's drill campaign. So far we only had one interval from the first hole, at least the first hole assayed, well, partially assayed, 6 meters or 35 grams per ton. So, I mean, I would say this is a... Okay, I can't even zoom in. Anyway, I mean, it's a straightforward story, I was going to say. Well, the case hasn't changed that much, is certain, in the sense that they are showing that this might be a quite large multi-million ounce gold system. Gold, silver, and some base metals. And they might have tagged into a source, a feeder, and they have a bunch of zones, and then they have a bunch of targets on top of that. So if we just, again, fast forwards like a year from now, I would expect them to have increased the size, the tons, maybe shown that, followed up more on the zones with, visible gold. Maybe they've actually confirmed there's maybe an even bigger price, the feeder at depth. So it's like, this is still wide open. I mean, the more they drill, the more they find. So that's the definition of a growth story. Could this fetch a very high price one day if they keep drilling and keep hitting like they do? If the trend continues, yes, I think so. What if this turns into one of the better, tier 2, maybe even a tier 1 mine down the line? Could this fetch, billion plus valuation? I think so. Depending on sentiment, obviously. In really good sentiment, it could be going way beyond that, etc. Is that a guarantee? No, it's not a guarantee still, but it looks I mean, the odds of this having, a few million ounces at least, I think is very high today. Um, so yeah, it's one of those. I was gonna say, I mean, it's a pretty clear-cut story. Is it pricing in a tier two mine? Is it pricing in one of the better underground high-grade gold discoveries in Canada? No. Okay. Could it be? Yes. What are the odds of that? Nobody knows for sure. But it's like at this rate, you can't, given the recent hits and all that, it's like they're hitting some abnormally good intercepts. That's all we kind of know. So I wouldn't be surprised that 1 year from now it's going to be valued higher than today. 2 years from now it's going to be valued even higher. That's the base case. In terms of what the actual blue sky is, I have no idea. I mean, we don't know where these zones end. We don't know if they're gonna hit the targets, 1 kilometer away. We don't know if they're gonna discover some additional, or will make some additional discoveries and all that. So it's like I don't think you need precision. I mean, this is very much in the hodl portfolio simply because the case is intact, and it's just they're doing what they've done for whatever 3 years now. They drill and find more stuff. They drill and find more stuff, and it actually appears to be getting better, especially at depth here. So that's obviously a good sign. That's like something you want to see. I think there's a saying that a good system, for example, leads to positive surprises. And certainly that is what we have seen, getting more and more visible gold. Yeah, I mean, again, there's a lot of stuff. They haven't really, this is the valley floors. I mean, they're, if we're well, I mean, they drill through the rock, but if we're talking at depth, I mean, they're not even down to the valley floor. So I mean, imagine they put some drill rigs in the valley floor. I mean, obviously we have the technology to drill 1.5 kilometer holes from whatever surface. So I mean, if there's something here, there's a lot of room to drill, because they're not starting to drill up here. They will be drilling from the valley floor, so they have that vertical relief. Hannan Metals, Hannan channel samples 126 meters at 0.22% copper from Provisto Central in Peru. Highlights: expanding copper gold porphyry footprint over 5 times 3 kilometer. Top of ridge soil sampling and mapping and prospecting in creeks has expanded the footprint of the porphyry mineralized system at Provisto Central over 5 times 3 kilometers. So that's obviously a huge footprint. Extensive leached copper mineralization discovered in outcrop. Impressive copper-rich outcrops have been identified in creeks. 2 channels separated by 700 meters are reported here. One thing to note is like they're channel sampling where they can in creeks. So it's not that, like, again, it's not like they can see exactly where the best parts is. This is, for all intents and purposes, a bit, arbitrary, let's say. Which means, I mean, if it's encouraging, it means even more, because, I mean, who's to say that Mother Nature just, I'm gonna erode the best parts here at the or I'm gonna put the best parts just where there happens to be a creek or two going through. No, it's obviously going to be quite randomized. So this is kind of where they can access it and do some samples. And people might not think that's like, 0.22, 0.16. Well, first of all, it's 126 and 192 meters. Second of all, this is the, as it says, leached copper mineralization. This is where you wouldn't expect much in terms of copper grades, because it's been eroded and rusted away, etc. I mean, correct me if I'm wrong, but it's like leach means, it's leaching out the metals. What the grades were when this was actually formed back whenever, before a creek came and before oxidation and weather came and actually started to leach it away, we have no idea. The hope is obviously that's like, okay, there appears to be very broad zones of copper mineralization. What happens if this extends to depth over a large area and those zones are not leached? Will they, drill a holes like 500 meter or 1% copper? I don't know. I would say it's certainly a possibility. Large team mobilized, a team of 30, including geologists, technicians, and local support, are working on the project, undertaking soil sampling and mapping. Large-scale geophysical survey soon to commence. Project scale-induced polarization. Geophysics soon to commence with the aim of mapping the vast porphyry target to depth. LiDAR contract signed, a large-scale LiDAR survey, yada. I mean, they're still learning. This is still early stage, and they have a whole district basically. Michael Hudson, CEO, states fieldwork during the optimal dry season with large 30-person team continues to expand the Previsto Central Porphyry system with top-of-ridge soil sampling, mapping, prospecting in creeks over 5 times 3 kilometers. We are now starting to understand this mineralized system better with gold-rich areas in the upper western areas, 800 meter higher vertical relief. I mean, that makes sense because you might have epithermal, you have the porphyry formed at whatever level, and then higher up you would have more gold-rich, high sulfidation, low sulfidation, etc., etc. So it fits, with the schematic one would expect that if you find a place that is like formed 800 meters higher than where they're getting copper mineralization, if there's gold there, it's like, yeah, that fits actually with a copper system, that you have the copper porphyries at depth, and then higher up you get the gold and silver and stuff like that. Transition to more copper-rich areas lower in the system to the east. We look forward to further results, including the first geophysics on the project, as the large team continues to de-risk the project and move it forward to drill permitting as soon as possible. So, I mean, I talked about Hannan before. I mean, again, similar to Goliath. I mean, this is just an intact case in the sense that this is much earlier stage. They don't have a drill discovery yet. The thesis is here at Valiente, they basically found entire near surface undiscovered copper porphyry cluster. And as you well know, there's quite a few of very large and valuable porphyry systems in Peru and Chile. And nobody had been here, nobody has drilled here. They discovered this, and then they, as the news release states, the more they test, the more they look around, the more they find. And now they have channel samples over 120 or more than that. Or was it 200? 192 meters or 0.16. That's obviously a wide intercept running 0.16. Previsto North, Previsto, here you can see a bunch of the major focus areas. Leach alkalic porphyry copper target exposed within an area of 1800 meters times 1000 meters. Vista Large, undercover 1 channel, 4.5 meters, multiple of various siliceous boulder of 1.5 kilometers streak. Who knows what this story is? Richard Herrera. Miocene age copper porphyry target, surface footprint 1600 times 800 meters, chargeable anomaly to 500 meter vertical depth, drill ready. Okay, 3 targets there. Appears to be porphyry, maybe, gold mineralization tied to porphyry. Divisoria, intrusion hosted hydrothermal breccias in a 2000 times 500 meter area. Anomalous zinc and lead with values up to, I mean, it's basically like I was going to say the whole shebang. I mean, you have a copper porphyry, it might form skarn systems. It might form epithermal, high sulfidation epithermal system, low sulfidation epithermal system, might form, whatever CRDs and stuff. So, I mean, this is basically totally untouched, and there might be several porphyry bodies here with several, corresponding systems of, again, skarn or sulfidation. Previsto Central, large 4 by 3 kilometer area alkalic porphyry style. So this is where they had these wide intercepts. And again, I think, I guess this has not been updated because now it said it's 5 times 3 kilometers. Previsto East, alkalic type gold epithermal mineralization over 1,200 meters. Jesus. Porphyritic and phaneritic, I don't know what that is. Intrusive rocks with weak propylitic alteration. Well, propylitic, we know that's a zonation. And pervasively leached gossanous dolomite boulders. I mean, this is, I guess, very early stage. And it says reported here, so you can probably read up more on that. Copper rock samples from Provisto Central, and that's the big one here. Here's again another target, that's Provisto East, so this is Provisto Central. And again, this map is starting to get more and more infill the more people they have. Again, look at the scale here, 2 kilometers. And I don't know what the vegetation is down there. I assume it might be a bit of, I don't know, jungle and trees and whatever. And this is kind of untouched. So everything, they're discovering everything and mapping everything for the first time, basically. And here they had some creek beds where they sampled these long intervals. And you can see the, I guess these might be also like, yeah, I think these are channel samples as well. So 2.5 meters, 5.8 meters, 1.5 meters. Then it goes up to 192, 126, and that's what I mean by it's like, who knows, you know, how lucky you were with the creeks. Maybe if whatever there were some of these creeks have eroded this theoretical porphyry intrusion in some other way, you could get a 150 meter channel sample as well. So I mean, the earlier stage and the more limited information, the more valuable or higher weighting one should put on the results. It's like the Kennerland discovery study. If you drill a 100 gram meter hole on the first hole, that means a lot more than if you drill a 100 gram meter hole after drilling 100,000 meters. Gold rock results from Provisto Central, 1.1 times 1.5 panel, 1 grams per ton. Here you have some, some gold showing up as well, and other stuff. Copper soil results. I mean, they're kind of, you know, kind of confirming with their interpretation that this is, you know, a porphyry intrusion or intrusions. And here you also have copper soil anomaly showing up. And again, this is quite a large body. I'm trying to remember. It's like, I mean, I'm not saying this is going to be a beast or anything like that, but it's like Cada East, that's an elongated, very large porphyry in Australia. The Philo system, Philo mining, but they have I think a telescope one where it's like high sulfidation and porphyry. They're kind of overprinted, if I'm not mistaken. But they also, you know, in the Andes there, I mean, they're drilling, I don't know how long strike they're up to, but a long strike. So obviously, from a theoretical perspective, obviously the size looks that it could be very, very impressive. And this is a thrust fault. So I assume that means that yes, this has thrusted over this. So this is the outcrop we see, where it's not being thrusted over by this block here. So we don't know what happens underneath. Underneath this cover, maybe it has been, I don't know, transported or something else. But I guess if it's a thrust fault, it should be just that it's slid over what is here. So the pink might be extending like that underneath. That's enticing, obviously. Gold soil results, you also show up, or you also saw there's kind of a hotbed around here. Well, there's quite a bit of high sample all over the place, but that again maybe jives with the fact that, hey, you know, there might be epithermal and skarn systems and what have you, plus the porphyry might have, you know, be gold bearing, etc. So I guess it makes more sense that gold could be showing up in more places, because there's a lot of deposit types that can form together with a porphyry. Yeah, you can go through the news release yourself. So I mean, I want cases to be simple. I think it should be kind of obvious. Again, a no-brainer in my opinion. A no-brainer, let's say a Hodel case, shouldn't need precision. So you know, what have I said about Hannan from the first time I talked about it? Well, they have a huge land package. They might have a virgin discovery in terms of a new porphyry district. Plus they have the Jogmec joint venture on the sediment-hosted copper stuff, which is, I mean, akin to what Kamuakakula and Ivanhoe mines have. So that's also a bird in the bush. That they are not paying for. Jogmec is paying for, but this is still 100% owned. I would not be totally surprised. I mean, what would one expect them to have a major come in and actually do a fat earning on this? Maybe. I mean, let's put it like this. I think there's quite a few major companies looking at Hannan Metals. That I think. It's the same what I felt about Inflection. It's like, okay, I tweeted that in like 2000, what was it, 21, 22? It's like, you know, I wouldn't be surprised to see a major come in and like, this got to be worth 100 million or something. That was my idea back then. And then obviously we later got the Anglo Gold agreement with, you know, earnings up to 142 million USD plus. And all that. I mean, theoretically, it could go way beyond that because they actually need to do a PFS to get to 75%, and in that case, that could cost another 200 million or whatever. So we have no idea how much AngloGold would actually need to earn in, you know, what amount, because the PFS study is going to be more expensive than any of the hurdles to get to 60% or 65% or whatever it is. Well, I think they would try to buy out Inflection than to fund a PFS study to get another 15% or something. That's my guess. But yes, and it's like, I don't know that this is the case, but I would not be surprised. Again, I can understand that much without being a geologist. There's great people behind this. I'm pretty sure Pierre Lassonde is invested here. It's a very tight share structure. I mean, it's crazy. I mean, it's early stage, and they're up to 57 million market cap. It actually traded 200,000 shares. Is that a lot? I mean, for an early stage explorer, it's kind of a big deal. But the thing is, again, if we weigh in the reward side of the function, this obviously has, I would say, beyond company making potential. I think a major company would really want to have this project. I think they would go nuts for a project like this. It's like, oh Jesus, we might have near, you know, we have, I mean, look at the scale bar, that's 50 kilometers or something. So it's like, yeah, 1,002 square kilometers. 100% owned, held by Hannan. I assume there's no underlying royalties as well. So, I mean, and you have just a bunch of targets. I mean, Previsto, for example, that's just in this part of it, and that's the main focus right now. But like, imagine what it would be if they have proof of concept. There's like, yes, there's a mineralized porphyry here, whatever. This could keep a major mining company busy for decades, just exploring their Hannan's land package. So they're obviously, given the dimensions, for example, of some of these targets and what they found, and you know that they're proving there's copper and gold mineralization and all of that. So yeah, on the reward side, I think this is basically, I mean, if they keep it 100%, that will add dilution. But from a strict like upside potential, I think Hannan has probably one of the largest blue sky scenarios of most juniors. But with that said, there's quite a way from having a crap ton of potential, especially with a project this size, and proving up that potential. And there's still no guarantees, and hence that's why the reward side has to be very large. That's the high risk, high reward business. We're not in the high risk, low reward business. So yeah, I mean, this is actually also in the HODL folio simply because, and not a huge position, mind you, because it's simply one of those like, hey, if this is a new economic near surface porphyry district in Peru, and they got the, you know, lion's share, let's say. Again, I mean, I don't know how many potential porphyries could be found here, plus all the other epithermal systems and stuff. Yeah, I mean, it's just hard to quantify, because you won't see a junior being able to you won't see a junior being able to stake this amount of ground where, you know, there's confirmed porphyry systems near surface in Peru. No. The majors have that locked up. So it's like the only way for a junior, I think, today to get a district scale porphyry position is to basically find a porphyry district that nobody has found yet. But there's not a lot of talk about Hannan. I mean, it's a lightly traded stock, kind of low key. I have them as a banner sponsor. I think they're sponsoring some other people. But yeah, it's not too much, I was going to say, volatility. I mean, look at the trading volumes. It's not huge. So it's not one of those where it's like, oh, everybody's talking about it. I mean, there's not a lot of people talking about Hannan. So to sum up, I mean, to make the case simple, it's like good people, huge blue sky, almost somewhat uniquely large blue sky in a sense, because it's so rare to have a junior find a potential porphyry district and stake it all in Peru. And we know Peru has produced some of the biggest porphyry giants in the world. But again, with that said, it's not like I'm betting the farm on this. In hindsight, everything is clear, obviously. If they end up making a fat discovery and prove that this is an economic porphyry district, one would have had a huge position. If it takes a long time, or they don't make a discovery at all, 5 years later, and then they make a discovery or whatever, it's like, yeah, somewhat of dead money until then, I guess. But yeah, my amateur opinion, I think there certainly must be some very large companies looking at Hannan right now. The question is, of course, also with, management and shareholders, do they want to farm it out already? Or do they want to prove up something and then bring in the big guns? That's, who knows? I mean, it's a risk-reward function. You give up some of the upside, but you take less downside risk in terms of dilution, etc. Then we have Juggernaut drills extensive mineralization containing chalcopyrite, pyrrhotite in semi-massive to massive sulfides in quartz veins, and breccia in 100% of first 6 holes out of 27 holes were made wide open. Bingo property, golden triangle. So for people that haven't kept up, the last news release was about the Midas project. That was the VMS project that they drilled and had encouraging visuals. This is the bingo property. This is the shorebet lookalike. We can see some maps here. Bingo main zone, 600 meters of strike. I guess that's kind of inferred strike, but here you have bingo main zone. So again, it's similar to shorebet, where it's like they actually have it outcropping. At least in places. In places. Here are 2024 drill color. These are the, I guess, gray light blue holes. This is from 23, where they drilled 5 meters of 12 grams per ton AU equivalent in mineralized shear zones. So that was this hole here. So they're drilling here with 2 holes, secondary vein with grab sample of high grade gold. They hit chalcopyrite in this hole. They found native copper in this hole, native copper in this hole, chalcopyrite and cobaltite. And this brings me back to what Goliath is drilling. The last news releases where they talked, they see copper and molybdenum show up. I think, chalcopyrite. So the idea is that, okay, we're seeing more high temperature minerals, so it's like they were deposited closer to the source. they dropped out before the gold, etc., started to drop out, or started to drop out quicker. So one idea here is that Juggernaut has a similar setting to Shorebet, similar type of system to Shorebet, but they might be the Bingo main zone, for example. They might be their outcrops might be closer to the actual source. Then the question is, okay, what has happened with the rest of the system, for example? I mean, if the Shorebet zone, upper parts, the upper zones, I mean, they're farther away from the source, let's say. I mean, does that mean they've been eroded here at Bingo and they're already down closer to the more copper-rich source, for example? I guess that's a possibility. It's like, I don't know, but there's typically been quite some faulting, so you might have a down dropped block somewhere where it's like the continuation of this, or it's eroded away. But the thing is, the interesting part here is going to be that if the thesis kind of is that, okay, this is another Juggernaut, because this is not far away from Goliath, has another Shorebet type discovery, but they start closer to the source. I mean, then it becomes interesting for both Juggernaut and Goliath shareholders, because they can kind of, I mean, these guys kind of work together, Juggernaut and Goliath. So I bet they, share all the geological information they can. So in that sense, I mean, if Goliath starts to drill into a source, let's say, and it shows that, oh, Jesus, it's getting better and better, or, oh, we hit the porphyry, and the porphyry is not too far off from where we're starting to pick up copper, for example. Obviously, I would say that kind of spills over in risk-adjusted implied value for Juggernaut as well. If Goliath proves that the feeder, let's say, the feeder zone, or the mothership at depth that fed this, if they are able to hit that and prove that's like, hey, this is economic, it's not only economic, it might be really good. I mean, then you start to get really excited for Juggernaut, I would say, because like, hey, they might be starting close to because these drills are obviously not, they're not drilling deep. Chalcopyrite and cobaltite, native copper, chalcopyrite, and all that. So this is going to be interesting. I think they're going to be starting maybe more and more as more people learn about both stories, that they might have, again, spillover effects. Same with, I mean, if maybe this is even lower than what Goliath is drilling, so if Juggernaut, even though they're not drilling deep, if they start to hit some really interesting stuff with, maybe lots of copper, whatever, maybe it's like, oh, that's what we should be expecting at depth over at the Shorebet property. Anyway, we don't know what the assets are going to be. Here you have some geophysics. Oh, you're right, double down hinge target. So they believe, I mean, if you have, this might, let's say, be a repeat of what they're finding at the Bingo main gold hinge zone. And here I have the scale bar 500. So there's probably plenty of potential here, and the drilling is going to say a lot, but of course Juggernaut is much earlier in the stage, where it's like we don't know what's going to be hiding over here, and they can't really prove up the entire thing, and they can't really kill the entire thing almost regardless of what the drill holes say. But there looks to be potential here, as they show, basically, and I think they have a lot of core pictures. But again, I'm not a geologist, so I can't make a pyrrhotite typically runs with gold, I think, over at Shorebet. So that's, and chalcopyrite is a copper mineral. But still, it's like, I absolutely have no idea what could this segment run. I have no idea. Will there be some, blebs of higher grades, etc.? Again, don't know, absolutely don't know. Let's look at the valuation, 12 million, so it's not like I should say, it's not like much excitement and success is priced in here, so I think the bar is relatively low, at least, and that's good, of course. I mean, again, it's like the lower the valuation, the less of a chance of success we need to see. because it's, you know, whatever, let's say fully diluted, I don't know what that is, 15 million, so that's 10% of something worth 150 million, for example. So one can say it's pricing in a 10% chance of finding something worth 150 million, and so forth and so on. I mean, that's our best bet. Another one of these where it's like, I'm not betting the farm on Juggernaut, but I think it's I think it's, is this the, yeah, I think it's obvious there's potential, and it looks like they have some, you know, you can read the news release. I'm not going to read through all of this. But like chalcopyrite up to 2%, pyrrhotite up to 20%. Again, in the shorebed zone, I think I remember that kind of lined up with, you know, that's where the gold is. Up to 20%, that doesn't mean it's 11.66% of 20. Who knows, it might be 1 meter of 20 and the rest is like 3%. Again, we don't know, so I don't even want to guess. It's like, am I expecting barn burners out of Juggernaut? I wouldn't say barn burners. I wouldn't say expect barn burners. I would be happy to be surprised. I mean, if they can show that, you know, this is somewhat of a homogeneous system like shorebed, I mean, that makes it look more likely that it is actually a form of shorebed. I mean, the Goliath has not really just bonanza grades hit all the time. I mean, I don't remember what the average is, but, you know, a few grams per ton AU equivalent over, you know, decent widths and stuff. So yeah, I mean, again, this is early on, but it's like, it would be good if they can show that it's like, yes, this looks like it's somewhat, you know, predictable. Yeah, and actually, Brixton Metals, I think this is the new news release. They put out Brixton Metals provides assay from the second camp creek drill hole of the second Camp Creek drill hole of the 2024 exploration program, with an upper 61.5 meter gold dominant zone and lower 1126 meter zone, or interval of porphyry copper dominant zone. Gold zone ran 61.5 meters of 0.89 grams per ton gold, including 4.65 meters of 6.5. Copper zone 1126 meters, running 0.31% C equivalent, including sub-intervals 575 meters of 0.45, 248 meters of 0.57, 81 meters of 0.6, 30 meters of 0.67. So I would say my conclusion is relatively same as the last hole they drilled. That is like, this was hole 290, right? Yeah, it must be 291. That's this sucker here. Where did the gold zone start? 160 meters. So yeah, okay, so that's up here, very close to the surface. There's a gold zone. I don't know exactly what that means. I mean, they have so many targets and stuff where they know there's gold and breccia pipes and stuff. I mean, this looks like a very large porphyry. So again, with a porphyry typically comes a lot of other styles of mineralization, including, you know, one of the barn burners hole they drilled a few years back, which was a breccia zone. And the belief is that that's the, Quinton talked about this, that he believes it's the breccia zone. That's actually, you know, that's mineralization and broken up rocks that's coming from the porphyry at depth, which is probably this porphyry. So there should be a genetic, or I was going to say direct connection between them. 1 second. There's a goddamn fly here. Yeah, got it. So again, no killer intercepts, not at that depth, but again, 291, that is here. So I mean, now you have a data point between these, and they're drilling here right now. I don't see where I don't think this news release has the has all the planned drilling holes. I don't think so. But here, I think this is kind of, interesting. And I think I remember it's like molybdenum is, should be going up when it's getting closer to the core, whatever. And it's like this, where the high copper is here, molybdenum spikes up here. Obviously, you have copper and gold, but you don't have any molybdenum. So I guess that is indeed, quite a bit from the actual potential potassic or higher grade core. But okay, so they now have, they can at least round out 0.5 to 0.75 grade shell, even though it's not the entire width, obviously. So again, they're expanding. Before this, they didn't know how it, what happened that way. So now you can assume, okay, there's probably mineralization between here, and probably mineralization between there. So it's like, it puts another data point on the board. So yeah, I'm still gonna stick with. Again, I'm not a geologist or a mining engineer, but it's like I think they want to see higher grades, or at least like where they get these 0.66%, for example, that they want to see higher intervals of that. 248 meters, 0.57. Yeah, again, I don't know. It's like at this copper price, probably you're not gonna build this. I don't think. But again, like I talked about in another video, if they prove up a friggin' huge porphyry here, we don't know what's gonna happen in 10 years with copper, for example. And again, it's like this is still relatively early stage. This is a 500 meter scale bar. They have an enormous property. Hopefully, the hope is that they're gonna tag at least some area where it's like even higher grades. It's like, more of the actual high grade core. Because if we look at least at the hole so far, so here you have the most purple one. So I assume that's the 884. So that's this one here. Actually 201 looks even. Well, okay, 201 is actually here. Just basically hidden in the middle. So that's the best hole. This is the second best hole. Here they drilled this one, which had some intervals of higher grades, and this is, relatively red. So let's say there's a 5 to 7, but not 0.7 or higher at least. So and here we actually have a red hole as well. But still, maybe, that's my assumption. That's they're basing it on. It's like, they believe there's a possibility that, you don't really know how the porphyry is behaving, because you're drilling 1 kilometer depth. Maybe there's a higher grade core that I would wish I could have a leapfrog model. I don't think you see the 294. That's not on here. No. So we don't actually know. That's the thing. It's like, where is this high grade? Where can we find even more of this higher grade stuff? Because again, this is just a grade shell based on the current drilling. That doesn't mean that's exactly how the shape is. That's just implied, let's say, at least based on the drilling. That's like it stops here because this hole didn't hit anything. It could potentially go all the way here because they hit 5 to 7% copper equivalent here, purple here, yada yada. So it's like there are assumptions here. But here are the 4 holes with the highest grade, well, except that one. So these 5 here. And they've drilled this way, maybe it goes this way. We don't know. Maybe I don't know what happens this way either. So it's like, we don't know. It from what I can remember, it was called a composite porphyry. So it appears to be a very large one. So maybe there's a bunch of stuff going on here. It's like you have different porphyry stages and whatever. It's like, so where is the actual well mineralized one? Where did that come up? It's like they don't think. I don't think they show the. No, they show the readings, not the geology. Yeah, so this is one that's very hard to say. At the same time, it's like. Well, I was gonna say, would one have wanted to see better assays? Yes, but still, it's around 40 million market cap, I think. It's looks to be a pretty huge system. And again, they have BHP funding, and this is only one of the targets, obviously. But then they have Hog Heaven, and then they have the El Dorado property. They have Langis and stuff like that. So it's like based on the sum of its parts, given what players are involved, it's hard to you can't say that Brixton does not have a lot of potential. It's like they have three major companies on three different projects, suggesting that those projects have a lot of potential. But we're still waiting. We're still waiting for that aha moment, that eye opener, let's say, come out of especially the Thorn property, since it's 100% owned. But I mean, if Ivanhoe makes a significant discovery at Hog Heaven, I mean, Brixton's stake in that could be worth multiples of the market cap as well. But still, yeah, so it's very much a ongoing exploration effort, and they've only announced 2 holes. We have no idea. Maybe they hit on the 3rd, maybe they hit on the 4th, maybe they hit on the 7th, maybe they don't hit, or at least around here. And they're going to be drilling other targets as well, if I remember correctly. So yeah, so it's just, I think, one to keep an eye on if you don't like high risk, high reward exploration. Maybe Brixton is more one you have on your watch list, let's say. I have a small position in my in most hodl folios, simply because I can't really argue with the valuation. It's just I don't know when a surprise could come, but it could come at any point, and I'm still prepared. If they make that really good hole, that aha hole, for example, or it's like something that makes everyone look at this differently. It's like then you kind of know, okay, BHP is certainly going to keep funding them in that case. Maybe they'll keep doing that anyway. But so I mean, if they hit a slammer of a hole, I might increase my position by 300% on that. And that's the more low risk approach. Wait for the quote discovery hole, even though that doesn't guarantee anything. But it's like, okay, then they can, let's say, hit 500 meters of 0.8% or whatever. Yeah, I was gonna say some. Lastly, Homerun Resources, University of California Davis lump silica testing. You can read this. So basically, I didn't even know they had a silica project, the Tatooine project in British Columbia. I've been only focused on the Brazilian silica. But they're going to send some samples to the University of California Davis to test this femtolaser on. I mean, to see if can this silica also be upgraded to at least 99.99% purity, maybe not 99.999% purity. That would be pretty cool, obviously. I mean, if they get to patent, let's say, and this femtolaser can be commercialized, patented, and it really works. I mean, I just assume that's got to be a possible game changer. As far as I understand, it's very costly and typically very dirty to get the kind of semiconductor grade ultra high or hyper purity or whatever it's called. So yeah, I mean, this is just one of many verticals that might surprise to the upside or might not. But I don't think there's that the femtolaser becomes anything. I don't think that's priced into the market. I don't see it that way. So it's like free optionality in a sense. But with that said, I have been thinking about Homerun more recently. It's like I already like the case. You saw my piece. I have a quite large position in Homerun. Hodl portfolios also have a large position in Homerun, and the case, I mean, simple case there is that I can see this with time becoming, a $500 to $1 billion company or more. I'm not saying it's gonna do that. I'm saying I can see how it could become that. And I think there's a pretty good probability that this will at least become worth more than the current market cap. That is my case. In reality, I'm gonna, of course, be wrong in the sense it's either gonna be higher or lower than what I estimated. And there's a bunch of stuff that can like affect that. I mean, if just a CEMEX deal turns into a real agreement, and I mean that's a company maker in itself, I believe. And I've been thinking more about that. It's like what I didn't really understand, realize, I guess is the better word, is that last year Brazil imported 17.5 gigawatts worth of solar panels. That sounds like a pretty large number. And the funny thing is, like, where are they importing this from? China. And they used to have subsidies on solar panels. So it was more competitive, let's say, to buy from China because they were also subsidized. Now, Brazil has put on, I think they actually had it on before, but added it back again, like 10% import tariffs on solar panels from China. Okay, that means that if you created the same solar panels in Brazil, for example, and the Chinese could build it at the same cost, it would still be 10% more expensive to buy from China. Or in other words, a Brazilian producer could be up to 10% less efficient and still outcompete China on just a pure cost basis, excluding any like, hey, you get subsidies for it being in Brazil, or it's like, hey, we prefer a Brazilian producer or whatever. But not only that, these are global container freight rate index from the 12th January 2023 to 4th July 2024. Currently it's the highest it's been. I don't know, I mean, it could go down lower obviously, but this is another input cost. You don't only have the tariffs, you also have the fact that China is quite a bit away from Brazil. And you need container freights. You need to ship said solar panels. If the cost of shipping goes up, the cost of buying them goes up, because obviously the Chinese want to make some money on it. So if the costs go up, they raise their prices. So you have two things working for a domestic producer of solar panels. You have tariffs that's been slapped on the Chinese solar imports or solar exports. And you have also, recently at least, an increasing cost of transport. So that made me really bullish in the sense like, wow, I did not know that Brazil actually imported 17.5 gigawatts of solar panels just last year. Also, it was, I think, like 99% imported from China. And they used to have subsidies for it, and obviously lower shipping costs and all of that. So it's like, what's a better thing to... because this ties into all the articles about Brazil. It's like, the president, I think they have a president, like, meeting with European representatives. I think Scholz was there not long ago and stuff. And all these articles about, Brazil wanting to become a green tech hub, or, green evolution hub. And possibly, the manufacturing base for, EV vehicles that could be then transported or sold to North America, because it would kind of skirt around the tariffs put on exporting or importing directly from China. So Brazil is betting hard on, let's say, green technology. They're the second largest, I think, at least in terms of growth, in the world when it comes to solar panels, and they imported 17.5 gigawatts from China. I mean, it's like the perfect storm for, home run. If you have Brazil that wants to have domestic production of the very things that they import a shit ton or have imported a shit ton, that's great. You have competitive advantages to the second largest growth market for solar, because the Chinese have a 10% tariff, and the transport cost from China goes up. That's free potential margin for you as a domestic producer, and that's what the Brazilians want. So imagine again, you have, um, I mean, if you produce solar panels in Brazil, that means more jobs. That's how politicians get re-elected. And Brazil has a crap ton of commodities for the inputs. And you see a bunch of car companies, EV companies, BYD, Chinese company, putting up shop in Brazil. And there's a lot of stuff that needs glass and silica. Silica is the second most tradable or used commodity in the world, if I'm not mistaken. So you have, like, let's say almost no. Let's fast forward 10 years. There was no real solar hype or real no solar boom in Brazil. You had no domestic production of solar cells. And solar cells are made up, the majority of solar cells are made up of silica and glass, or silicone and glass, in both weight and value. So when you think about solar panels, you should think about silica sand, because that goes into glass and silicone and whatever it's called, the polysilicon and that stuff. So it's basically silica. Silica is the main value and main input of solar panels. So you have a country that's building out its solar electricity mix, or their solar capacity, second only to China. They want to have domestic production, from not having domestic production and not really having any domestic buildup of solar panels 10 years from now. Now everything of that is happening while they're slapping a 10%, have slapped a 10% tariff on the Chinese, and the freight costs are going up. I mean, talk about the right time and right place. I don't know how many potential business ventures or sectors that Homerun silica could be used for. And the main growth market for high purity silica is in the solar business. And that is what the Brazilians want to build domestically, and maybe later on even export. So imagine the pent up demand, let's say, for high purity silica in Brazil, given what they're trying to do. And then the fact that they're kicking the legs out under from the Chinese, kind of, with the tariffs, and also not thanks to them, but transportation costs are going higher. So I mean, they are enabling and encouraging domestic production, and high purity silica is like the, let's say, most important part of the solar, and you have the second largest growth market. Jesus, I mean, that made me, again, I didn't fully understand that they have up to 17.5 gigawatts from last year of, like, low hanging fruit to be replaced, let's say, domestically. That's quite something, I would say. And if they want to export it, build it in Brazil, they're gonna need even more silica than they need to produce the 17.5 or whatever they want to, whatever solar capacity they want to put up each year. Yeah, I think, I mean, again, it's like nothing is guaranteed, but I mean, it's almost like Homerun might have the, the kind of a macro timing that is, like, almost hard to believe. It's like maybe 10 years ago, maybe if you had the same deposit, wouldn't be as big of a deal. It's like, well, we don't have any solar production here and we can't compete with the Chinese because that's where they build them, so we have to ship them there. To go, fast forward to today, it's like we're the second largest growth market for solar. Silica is the main component of solar, and now not only do we want to keep building it out, we want to produce them domestically with our raw materials, and later on we might want to export. And not only solar panels, but like EV vehicles and whatever. So it's not even only solar. It's like everything tied to green tech seems to be on the agenda for Brazil, and a lot of that stuff, including cars, use a lot of glass. And glass needs silica. So yeah, I mean, Jesus. So I've been buying the dip recently. And again, this is also one of those longer term cases. I don't care what the next 30% is going to be. I don't care what the next 50% move really is going to be. The case here to me is that if this works as good as we hope, and if this timing is as good as it looks and all that, I think there's possibility that Homerun could become a $1 billion plus company over the next 2 years perhaps. And that's not a guarantee, but if that, I think there's a pretty good chance that Homerun will be worth more than it is today over the next 12 months. Maybe even over the next 6 months, or maybe even the next month, because I think the 90-day period and stuff is coming up. Again, no guarantees, but that's why I'm not all in on any of these stocks. But I can see pretty clear and simple and obvious cases for all of them. So so like an article like this from June recently, with reintroduction of import taxes on Chinese solar panels, Brazil hopes to develop its own industry. It's like, Jesus. It's like almost like, I mean, you basically could not ask for better timing for Homerun. The second biggest solar user decides to build its own solar industry, which requires a lot of silica, and Homerun just happens to have put together a portfolio of some exceptionally high purity silica assets in Brazil, no less. Thanks for listening. Consider me biased. Assume I own shares of all companies I mentioned. Some are banner sponsors as well. So again, twice biased. Don't invest money you cannot afford to lose. There's no guarantee of success. I don't share your profits or your losses. And most importantly, don't buy anything unless you see the reason why you're buying it. I might like a story, some news comes out, and it's like, it's the opposite of what I want to see for the case to, the case to play out. If you don't see that, let's say some bad news comes out for a company. It's like, okay, all of a sudden, maybe it's not, a death knell or anything, but it's like, okay, all of a sudden I'm not that excited by this company. It's like, I'm not going to be ringing the bell, if you know what I mean. And I mean, anytime I buy a company now, I'm fully invested. So I'm always selling something I already like. I'm selling something cheap to buy something just became cheaper. It's like with Homerun. Okay, it dipped for no reason. Okay, I sold some other stuff and bought more. But that's like in real time, if you know what I mean. So it's like, if you don't understand the case really, and it's like I'm getting better and better understanding of the Homerun case. When I learned it's like, okay, they imported 17.5 and then the tariffs and all that, it's like, okay, now my conviction went up. So when they dipped, it was like, okay, this is perfect. I'm gonna add actually even more. My point is, if you don't see the case, if you don't know what you want to see, etc., don't invest, because you're the only one that's gonna be, have control of your portfolio. at any given time. And it's like, I can just imagine what a shit show it would be. It's like you buy 20 stocks based on whatever, 6 different people, what stocks they like, and they all have a case in their head. And for 6 of them, it's like something changes that the case like materially gets worse. So when volatility hits, perhaps on the downside, it's like on a news item, it's like, okay, that is actually material. It should go down because now the case is not as good as anymore. And those people see that and they sell because, hey, my case was built on this not happening, let's say, and you don't realize that. So you're stuck there. And it's like, I don't know what to do. And the opposite side of that coin is that the case is intact. It sells off for whatever reason, market crash or shorting attack or people just taking profits, whatever. And again, you don't realize that nothing has changed. So price goes down and then you sell. In one case, you maybe should have sold because the case isn't intact anymore. In the other example, case is intact and you shouldn't have sold, so you sell, and that's probably going to cost you even more. It's like a saying I saw recently, the costliest mistakes I've done are sells. But yeah, anyway, point is, don't buy anything just because I like it. I never know actually what stores I'm gonna make money on. There's just higher and lower probabilities and stuff. And typically, if I'm gonna make money on them, big money, we're talking maybe 1, 2, 3 year hold periods. So it's not like it's gonna happen tomorrow anyway. Thanks for listening. Bye bye.